You're listening to AI Prism from Seoul Economic Daily.
Samsung Electronics is down 4.8 percentage points in foreign ownership year-to-date. The KOSDQ sits with 63.8% of its stocks in the red, and top 5 bank household credit loans are up nearly 4 trillion won, or roughly $2.8 billion since April. What should I be positioned in today, and what are the key risks before the open? It's Monday, June 22. Here's what today's story could mean for the Korean market.
Samsung and SK Hynix hold a combined market capitalization of 4,039 trillion won, or about $2.9 trillion, dominating 54.6% of the hashtag KOSPI index today. Foreign investors reduced Samsung foreign ownership to 47.6% over the past year.
Right, and institutional sellers dropped SK Hynix foreign ownership to 51.3% during this recent cycle. Foreign investors aggressively dumped 75.57 trillion won, or roughly $54 billion over the last 24 trading sessions, making me ask if this is a structural exit from Korean tech.
Well, no. Global funds mechanically adjusting their portfolios during the MSCI and FTSE index rebalancing forced massive ETF selling pressure recently. Like mandatory index weight adjustments trigger automatic fund liquidations immediately.
So the post-June 11 Four Witches Day expiration triggered the return of foreign buyers this month by clearing out those expiring derivative contracts.
Exactly, and this quadruple witching event removes underlying market volatility immediately. But bit 2 leveraged retail investors pushed household credit loan balances to 108.33 trillion won, or roughly $77 billion as everyday traders borrow heavily.
Wow, average citizens leveraging their personal debt amplifies systemic market risks today. So Samsung Electronics anticipates a massive consensus Q2 operating profit of 88 trillion won, or $63 billion.
Yeah, and SK Hynix expects an operating profit of 64 trillion won, or about $46 billion in the same period.
Yeah.
LG Energy Solution forecasts its first profitable quarter since late last year with 207.5 billion won, or $148 million.
Wait, really, this battery sector profit proves broader market participation is expanding this quarter, but 50 trillion won, or $35.7 billion in semiconductor bonus payouts acts like a massive bonfire warming the tech sector right now.
Right, because workers suddenly spending these enormous bonus checks on local dining and travel stokes domestic service inflation immediately.
Oh, wow. So Bank of Korea inflation warnings risk burning down the broader market with hawkish rate policies soon. The central bank reacting to that sudden local inflation forces higher interest rates throughout the upcoming quarters. Like, elevated borrowing costs naturally compress equity valuations over the next few months.
So the near-term upside catalyst is foreign re-entry into Samsung due to its thinner ownership floor now that the mechanical index rebalancing is clear. The key macro risk is the Bank of Korea turning hawkish if those semiconductor bonuses stoke service inflation. And with 63.8% of KOSDAQ stocks remaining negative year-to-date, narrow market breadth makes small-cap rotation dangerous until Q2 earnings confirm fundamentals.
That's today's AI Prism, stock investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a One iFry award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.